Good morning. I'm Ryan Lehman, and this is Markets in a Minute for the week of June 29th. Last week was really defined by volatility around the AI trade, with investors reassessing valuations and being much more selective in terms of who they think the potential future winners are going to be. This was on full display throughout the week, with markets and single stock names experiencing some of the most violent intraday swings that we've seen so far this year. Thursday was a prime example of this. After the bell on Wednesday, Micron reported a blowout earnings report with revenue guidance that well exceeded Wall Street expectations. Their stock subsequently soared in Thursday's session, but not one of the Mag 7 names ended the day in positive territory. Looking at Apple in particular, that was the worst performer of the group after they announced price increases across their product lineup. This was largely due to a shortage of memory and storage chips. And then outside of the US, Korean markets that are also heavily tied to the AI trade, they saw similar action. Despite starting the week at a fresh all-time high, the Kospi finished the week down about 8%. This was largely driven by sharp declines in two of the index's largest names, Samsung and SK Hynix. They both saw double-digit declines. Despite all the carnage, though, the index is still around 175% above its 52-week low. Moving on to geopolitics, we'll start off with our weekly Strait of Hormuz traffic report. Data here was pretty encouraging. The latter part of the week showed around 50 vessels on average successfully crossing the strait. This was in the single digits just about 2 weeks ago. And even though we're still around half the pre-war average, the current trend is pretty encouraging. And this was clearly reflected in global oil markets. WTI traded below $70 a barrel towards the end of the week. This is going to correspond to some of the lowest prices that we've seen since the conflict began back in early March. Bond markets, they also got a welcome boost from this. Those declining energy prices eased some near-term inflation concerns. The 2-year traded around 14 basis points lower than its recent high. And then if we look at the 30, that was roughly 30 basis points off its recent peak. Now, looking ahead to this week, it's likely to be a bit of a low volume week due to the 4th of July holiday. However, it will be a bit busy on the economic data front. We'll get a slew of jobs data throughout the week, including JOLTs and payrolls. And then we'll also get some manufacturing data in the middle of the week. And with that, that'll do it for this week. Thanks for watching. I hope everyone has a safe and happy 4th of July. If you enjoyed this video, please feel free to like, share, and subscribe. We'll see you next week.